The Bitcoin cycle follows a rhythm that's driven by the most emotional players in the market, the short-term holders. So if you don't understand how this volatile cohort behaves, you're leaving serious opportunities on the table. So in this video, I'll break down some of the key indicators that reveal their moves and show you how to spot powerful counter-trend signals that, by definition, most people completely miss. So let's get into it. When you zoom out on this Bitcoin bull cycle, it's been a thing of beauty. We've gradually meandered our way up from around $16,000 all the way up to over $120,000. And we've done that with very few periods of those wild, chaotic price swings that, if you've been in Bitcoin long enough, you've learned to both love and respect. But one thing that has stayed true yet again this cycle, just as it has in every cycle before it, is the behavior of Bitcoin's short-term holders. This group is probably the most important cohort to keep your eye on when studying the Bitcoin market. So for those that aren't familiar, short-term holders are investors who have essentially held their Bitcoin for 155 days or less, so about 5 months or so. And there is very little debate about this number, because when you look at the data, once someone crosses this 5-month threshold, they start to behave very differently. The reason that short-term holders are so fascinating to study is because they are without a doubt the most reactive and emotional traders in the market. Now, our job as market participants is to stay as rational as possible, as long as you can. And that makes short-term holders an incredible counter-trend signal to watch, because they tend to do the opposite of that. The first thing that we can look at to track them is the short-term holder realized price. This is essentially the average price that all short-term holders paid for their coins. Now, there are a few different ways to calculate this, and most versions you see online will agree within a few $1,000s or so. The version I'm showing you here is a dynamic UTXO weighted calculation, which essentially gives more weight to the coins that have moved more recently. But we don't need to go into the specifics of how it's all calculated. What we need to know that is right now, it sits at roughly $105,000. A simple way to think about this is, when Bitcoin's price is above the short-term holder realized price, it's reasonable to lean bullish on the market. But if the price dips below it, that doesn't necessarily mean the bull market is over. If your view is that we're still in a bull market and we're just seeing a temporary slump, then historically, buying when the price is below this level has been a winning strategy. And not just in this cycle, but in every previous bull cycle. Now, the same logic actually works in reverse during bear markets, where the short-term holder realized price often acts as the ultimate resistance that price can't break above. This happens because recent buyers who expected a rally often just want to sell at break-even after another drop, creating a strong selling pressure. Now, enough about the realized price itself, let's talk about what we can derive from it. One of my favourite tools here is the short-term holder cost bands. Instead of guessing how far price is stretched above or below the realized price, we can use a simple color-coded map to measure it. Looking at this cycle, we can see that price is mostly traded above this white line, i.e. the short-term holder realized price, for the majority of the bull market. There was one brief period where the price entered the upper red band, and that marked a big local peak of euphoria before a sizable correction back down to the realized price. As we discussed earlier, whenever the price drops below the realized price, in this case into the green zone, it has presented some of the best buying opportunities of the entire cycle, as this is when the average new participant is feeling the most amount of pain. Right now we're sitting in the most common range, the yellow band. The upper boundary of this yellow band runs to about $131,000. We've seen price tap above this into the orange band multiple times already this cycle, so I wouldn't be surprised if we revisited it again. Though each time we enter, the probability of a short-term correction increases exponentially. This band actually stretches all the way up to $157,000 at the moment. And if we do get another euphoric price surge like we saw last year, the upper red region extends all the way to around $190,000, where a correction is pretty much almost inevitable. The next metric I like to look at is the short-term holder net unrealized profit and loss, or just the NUPL for short. This essentially measures how much unrealized profit short-term holders are sitting on, but instead of just giving you a raw number, it uses color coding to reflect market sentiment. Right now we're in the green optimism phase, and that's the most common state we've been in this cycle, and is quite similar to the yellow cost band we just looked at, meaning the average short-term holder is feeling positive but not euphoric. Again, this works well as a buy the dip tool. When we drop into the blue fear zone, history shows that it's been a great time to stack some extra sats, which again have been those moments when short-term holders are feeling the most pain. For swing traders, it's worth noting that we've entered the orange belief phase twice this cycle before pulling back, but so far there's been no major euphoria or capitulation on this metric. This tells me that this cycle has been remarkably measured compared to the dramatic swings in mood that we've seen in previous years, but that doesn't mean it can't happen again. In fact, I'd say we're well overdue for some dramatic price action to either direction. Now finally, we've got the MVRV momentum indicator. This one is all about quantifying the behaviour of short-term holders. It compares their average cost basis with a longer-term average to produce a momentum-style oscillator that shows whether they're sitting on extreme profits, deep losses, or just somewhere in between, and how quickly that situation is changing. Put simply, it's a way of visualising how hot or cold short-term holder profitability is, and it can give you an early read on whether they might switch from buying strength to selling pressure and vice versa. Historically, when this MVRV momentum hits around 0.3, which is 30% profit, or minus 0.3, which is a 30% loss, it tends to signal a local reversal because the average holder's position has become too stretched in one direction. And as we all know, Bitcoin loves to do the opposite of what the majority expects. At the moment, the MVRV momentum for short-term holders is just under the 5% mark, and that means that the average holder is feeling a touch optimistic, but nowhere near overheated levels, despite flirting around its all-time high in price. To me, that suggests that it's not the absolute best buying opportunity, but it's also not a moment to panic about a looming reversal. Overall, I base a large part of my market buying decisions on short-term behaviour. And right now, that behaviour is telling me that we're in a healthy, optimistic stage of the cycle that's not really overstretched in either direction. And it shows that the market is accepting these elevated price levels better than I ever expected it would. So, to wrap things up, the behaviour of short-term holders really is the heartbeat of the Bitcoin market on a day-to-day basis. These are the traders who have held their coins for less than 5 months, and because they react so quickly and often emotionally, their moves often give us some of the cleanest counter-trend signals available. You don't get these sort of rich signals available in traditional assets, and it's just another brilliant thing about trading or investing in Bitcoin. You can watch how short-term holders behave to help yourself stay rational when things get noisy or unpredictable. Another big takeaway for me is how useful the short-term holder realized price and the cost bands are for understanding market health. When Bitcoin's price stays above this realized price, it's a solid sign to be bullish. But when price dips below it, that's often when the best buying opportunities show up. Or in a bear market, it can act as a stubborn resistance level where selling pressure piles up. This dynamic can help you read the market's mood, and for you to know when to hold your nerve or prepare for a shift. Finally, the MVRV momentum indicator is telling us that right now, short-term holders are feeling optimistic, but not overly euphoric yet. This balance suggests that we're in a healthy, steady phase of the bull cycle, which has seemingly more room to run before emotions swing to extremes. It's a sign that the market isn't overheated and that there's plenty of potential upside. But, as always, price could flash crash back down at any given moment, and if we dip back below the realised price again, I'll be buying up every bit of it. So, like in any market, the outsized gains come from thinking and acting like a contrarian, and if you're not listening to the data, you risk following these short-term holders blindly. Because at the end of the day, we're all short-term holders at heart. We're only human, prone to panic or getting caught up in the euphoria. But like I always say, your biggest edge comes from doing what most others won't, and that's exactly where the biggest opportunities lie. If you're serious about Bitcoin analysis, my full custom indicator suite is now live. Built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.